Welcome to the Takeaway series on Channelchek. In early June, the 2023 Global Energy Transition Conference united the world's energy and industrial leaders to accelerate net zero pathways, forge sustainable business models, and deliver on the transition imperative. Today, Noble Capital Markets Senior Equity Research Analyst Michael Heim discusses key elements of the global energy environment with C-suite executives. Take it away, Michael.
Hi, this is Mike Heim, and I'm the energy analyst for Noble Capital Markets, and I have with me Corey Rattan, who is the president and CEO of Alvopetro Energy. Alvopetro has exploration production assets down in Brazil, and we're just had a chance to take them around marketing. Want to ask them some general industry questions, and we're going to start with a comment, and that is that we've seen OPEC maybe getting a little bit more active in the last couple months with a couple production cuts, but it doesn't seem to have done anything for oil prices yet. Any thoughts on why that is?
Yeah, I think there's a few things. First of all, you've got Russia having ramped up production during the same period of time. I think you've also got an overall industry situation where companies are just reinvesting less of their cash flow in drilling and growing production. So it's a different dynamic than what we've seen in prior cycles. I think you're seeing companies prioritize the repayment of debt, and also now with returns to shareholders, either in the form of dividends or share buybacks. And this is a model that well over 5 years ago that we've been preaching that E&P companies have historically overinvested and underdelivered real returns to shareholders. And our solution to that was, and this is before we even came on production, was to basically say, look, we're going to take half of our cash flows, reinvest it in organic growth, and then take the other half of our cash flows and return that to stakeholders. And we prioritize the repayment of debt, and then we've introduced a dividend, which is you're seeing a lot of companies do something very similar.
You mentioned, historically, it's been an industry that's very cyclical, that during the boom periods, people overinvest and we have excess supply and crashes down. And then during the under cycles, the opposite. And you just kind of said it, we're not doing as much investment. You can see it in the rig count. And do you think we're entering a period where the cyclicality of energy prices has diminished and we're a little bit more stable?
Yeah, I think obviously without these massive amounts of overinvestment that have typically happened, that should help moderate things. I think you've got another unique thing happening with natural gas prices. So you've seen them come down quite a bit in North America. And natural gas prices have always been more subject to local supply demand factors. But you've got something really unique happening where in North America, E&P companies have been focused on liquids rich natural gas plays or tight oil plays that has associated natural gas. And the net effect of that, especially when you have $100 WTI, is no matter what the gas price is, you're still going to be drilling those wells and producing natural gas as a byproduct. So, that's just something unique. I think there's a lot of investment happening in LNG to try to moderate those impacts as well.
So you think it's on the gas that it's a lot more than just a warm winter weather, it's there's other issues.
Yeah, no, I think there's that unique issue where there's a lot of associated natural gas being produced, which is going to have an impact on reinvestment in pure natural gas plays for sure.
How does the push towards net zero and the increase in renewables affect some of that supply? I kind of get the feeling that some of the majors are a little more reluctant to invest too much in energy because they want to be viewed as a green company.
Yeah, and to be honest, that's kind of unfortunate because you've got some very large, very responsible companies being pushed out of investing. And the reality is the world needs more energy, not less. So, I'm not sure that trend can reverse itself, but I think what we want is responsible companies producing energy responsibly.
Well, that creates a perfect situation for you and some of the smaller producers, though, that if it creates a situation where energy prices remain high, you can step in under the majors and fill the gap to some extent.
Yeah, no, we certainly view this as an opportunity. I think our unique situation in Brazil, we're able to deliver clean burning natural gas at more reasonable prices than what historically has happened. We can do it very efficiently. We're not running any pumps. We're not re-injecting any. We're not producing any water. So from a greenhouse gas intensity perspective, we can produce energy pretty much as good as anyone can, and I think we're doing it very responsibly, minimizing our impact and trying to leave a lasting positive influence on the communities where we operate.
Let's talk a little more specifically about Alvopetro then. You talked about there's your desire to do 50% in growth projects, 50% return to shareholders. And you've done that. You did a big expansion of your processing facilities. It seems like now things are shifting a little bit more towards the return to shareholders.
Yeah, yeah. So a couple things. Almost 3 years ago, we became the very first independent company in Brazil to deliver sales specified natural gas into the local market. So the first company other than Petrobras, and we think that's a huge accomplishment. The nice thing about that is when we developed all that, what came with it is we invested in pipelines, we invested in a gas processing facility, we control that all 100%. And now it sets the stage where we can very quickly convert natural gas successes into production and cash flow much quicker than our peers can, because we've made all those investments. We've got a very interesting project that sits immediately north of our existing asset, and we think that has the ability to more than double our production and reserves and enterprise value. We're very excited about it, and we've got all the pieces in place. So I think what you've seen since we came on production, you're absolutely right. We probably over prioritized returns to stakeholders, and what I mean by that is we completely repaid all of our project debt within the first 2 years of coming on production. We introduced a dividend. We've increased it 3 successive times, most recently up to US 14 cents per share. We pay that quarterly. And now just lately, probably in the last year, you've seen a bigger focus on the reinvestment portion of the equation.
So it sounds like you feel you have ample drilling opportunities. You mentioned almost doubling production as a long-term goal. Is that a fair assessment?
Yeah, no, we certainly feel like we've got a great inventory of opportunities for the next several years for sure. But I think with that investment in strategic midstream assets in our core operating area, we certainly would always be welcome to adding more opportunities to the mix.
How about the demand side? We've seen a little fall off in demand in the last couple months. Do you think the demand will grow and keep up with, again, you potentially doubling production?
Yeah, I think on a macro basis, Brazil is actually still importing natural gas. They're importing natural gas via LNG. So I think as long as that persists, there's lots of demand for locally produced gas. There are month-to-month nuances with demand that happens, and there are nuances that happen with our off-taker, the local distribution company, Bahia Gas, where they're trying to balance their portfolio by committing to firm volumes. And if there's any change, say around a plant doing a turnaround or shutting down for a short-term period of time, what happened during those periods of time was Bahia Gas basically was taking just the firm volumes from all the suppliers. So the indications are that they're back to demanding as much gas as we can produce.
So all your sales are on interruptible basis?
No. 2/3 are on a firm basis, 1/3 have been on a flexible or interruptible basis.
Okay. And as you explained it in the last conference call, that's maybe half the situation. There's another one in terms of nominations with your joint venture partner. Why don't you explain how that works?
Yeah, we've got a unique kind of unitization agreement with our partner, and what it does is it allows for when the other party isn't nominating for their share of gas, it allows the other party to take that share, and it goes against their share of 2P or proved plus probable reserves. So with respect to a thermal electric expansion that our partner's doing, they've actually started to nominate for gas. So our share of that is lower. It doesn't change the amount of reserves that we get to produce from the field. It just changes the pace. So That's strategically the reason why we're investing in this other opportunity that's 100% working interest, Alvopetro, that sits immediately north of that. It's pipeline connected. We just tied in the first key well, and we're going to kick off a fit-for-purpose development drilling program here in the second half of this year.
What about acquisitions? How do they fit in the picture? That would seem a natural when you've got kind of a flush balance sheet.
Yeah, we built up $21 million of cash and working capital. We've got some pretty strong free cash flow generation capacity. From a per share growth perspective, I think if we can invest successfully in these projects immediately north of our core area, we can add a lot of shareholder value. That being said, we're certainly open to acquisition opportunities, but we need to have willing participants on both sides of the equation. So
it does seem when you see energy prices move that kind of creates a situation where there's uncertainty on both sides of an acquisition sale on what the appropriate pricing would be. As we get a little bit more stable, do you think acquisitions might start to pick up?
Yeah, and I think if you don't see E&P valuations improve to where we've had them more historically, I think that the reality is an acquisition strategy works better, when you're seeing companies trade at these very low multiples.
I'm running out of questions. We've done this so many times, I can't remember what one we've done again. Oh well, we'll cut that out. I guess we can end it. That's 11 minutes. Well, I want to take this opportunity to thank Corey for spending a little time with us and talking about some of the major issues and highlighting his company, Alvopetro. It's a company we've been recommending for a couple of years and I think has an exciting story. And if you're looking for more information on the company, you can certainly go to the company's website or go to channelchek.com and download any of our reports or latest comments on the company. So again, Corey, thank you, and look forward to a good day of marketing with you.
All right, thank you.
NobleCon 19 at Florida Atlantic University. Located at the center of one of South Florida's most vibrant and fastest growing cities, Boca Raton offers an unparalleled cultural, recreational, educational, and business environment, the perfect setting for NobleCon 19. Now in its 19th year, NobleCon 2023 will be our biggest ever. We're inviting more companies, larger companies, and dramatically expanding the investor representation. And with the move to the FAU College of Business Executive Education, all new, state-of-the-art 50,000 square foot facility, NobleCon is the gold standard on the conference circuit. NobleCon 19 at FAU. It's time to invest in knowledge. With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then Channelchek truly is your tree. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series lunches, and to be part of the preeminent annual Small and Micro-Cap Investor Conference, NobleCon. And here's the best news. Since Channelchek is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channelchek is North America's leading source of research on the companies that just may change the world.